Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Tesla is set to report its Q1 2020 financial results on the 29th of April. What will the numbers look like? Can Tesla post a profit? How will the stock react? What surprises might be in store? As I've said, I can't predict the future, but I can infer a few things and speculate about others based on clues, so that's exactly what I'll do. And guys, spoiler alert, this could be the biggest surprise quarter we ever see from Tesla. More on that a bit later. Let's dive in. Hey guys, before I forget, WeBull have extended their offer for US residents. If you'd like to help out the channel and get up to 2 free stocks, use the link in the description. Alright, let's get back to it. Prior guidance and seasonality. Many months ago, well before the health situation, Tesla told us to expect Q1 2020 to hurt. Not because the automotive industry is seasonally weak in Q1, although that's true, but due to the construction and ramping of Gigafactory Shanghai, early works on Gigafactory Berlin, and the Model Y ramp in the US. It's reasonable to expect a strong drag on margins in Q1, which will also bleed into Q2. Production and deliveries. Even with temporary factory shutdowns, Tesla was able to produce a near record 102,672 vehicles in Q1 2020 and deliver a whopping 88,400 of them. This is a 40% increase over Q1 2019, but leaves around 14,000 vehicles in inventory, which will be a drag on revenue to the tune of around $700 million. Tesla had previously told us they planned to build inventory in Q1 2020, so this should not come as a surprise. Product mix and margins. Historically, Tesla's modus operandi has been to produce the high-spec, high-margin versions of their vehicles first before filling orders for the mid- and low-spec models. Typically, this means after a product launch, we see temporarily inflated automotive margins before they stabilize. Model Y deliveries began in the final weeks of Q1, starting with the top-end performance version. While these deliveries will have an impact on revenue and margins, 2 weeks out of a quarter isn't enough to make a huge difference. Q2 is where Model Y will really have its impact. Of course, we can't discount how incredibly rapidly Tesla is optimizing and finding new efficiencies at every level of the business, from corporate structure to manufacturing techniques. Over time, Tesla's margins continue to march steadily towards 30%. Margins could make or break Q1. Cash on hand. Tesla ended 2020 with over $6 billion in the bank. That's billion with a B. And then early this year, they raised a further $2 billion with a stock offering, more than enough to get them through a global recession. What impeccable timing. No doubt, some of this cash has made its way into Gigafactory Shanghai and some to Berlin, some to Model Y ramp, and plenty into other areas of the business. But I expect Tesla to remain flush with cash moving forward as they're becoming exceptionally resourceful with capital expenditure. The more cash Tesla has on hand, the happier Wall Street will be. This quarter, cash on hand really matters. Speaking of cash, Tesla has opened the floodgates recently with a slew of high-margin revenue, some of it literally coming out of thin air. Let me explain. Full self-driving revenue. Tesla has hundreds of millions of dollars in deferred revenue from the sale of full self-driving. As new features are rolled out, more of this revenue is incrementally recognized. How much, if any, will fall into Q1 is anyone's guess, but I suspect it will be more than zero, and because it's pure margin, it will go straight to the bottom line. Performance upgrades. In late December 2019, Tesla announced a $2,000 acceleration upgrade for long-range all-wheel drive Model 3 owners. How many owners opted for this over-the-air upgrade during Q1 is unknown, but what I do know is that every one of those upgrades is almost pure profit for Tesla. Imagine 10,000 owners upgraded. That would be an extra $20 million to the bottom line. Premium connectivity. Also in December, Tesla announced a $9.99 monthly premium connectivity service to enable features like traffic, Netflix, and YouTube. While this revenue won't transform the business, Tesla may share details of the take rate on this service that could have a positive impact on the stock price, as it will give us a clue as to what's in store next quarter and beyond. For context, if roughly 1/4 of Tesla's million-strong fleet was subscribed the entire quarter, it would add over $7 million in revenue. Zero emissions vehicle credits. This is the most exciting and unpredictable piece of the Tesla pie, but mark my words, this is the most likely lever to send Tesla stock soaring in 2020. This is the surprise I mentioned earlier. I really don't understand why Wall Street and the wider finance media are not talking about this. It's like they don't know, or they've forgotten, or they're too busy buying the stock first. Let me refresh your memory. Legislation is forcing automakers to produce a certain number of zero-emission vehicles or face gigantic fines. Each of these vehicles gives them a credit. Enough credits and no fine. Not enough credits, huge fine. Problem is, making EVs is kinda hard, kinda expensive, and takes time. Enter Tesla, who for every vehicle they produce, score a ZEV credit, which is worthless to them but of great value to others. I really want to emphasize the importance of this. It's like every single vehicle Tesla makes comes with a pre-packaged pile of cash Tesla can bank in the future. ZEV credits are basically a waste product of Tesla's business. Imagine if every time you went to the bathroom, a line of dung beetles turned up with open wallets, desperate to buy your unwanted goods. Fiat Chrysler has an agreement to purchase more than $2 billion in ZEV credits from Tesla between now and 2021, with about 80% of those expected to be in 2020. It's 2020 now, guys. Get it? So, if 80% of that revenue arrives this year, Tesla can expect around $1.6 billion in cash out of thin air this year. I have no idea how the credits will be spread throughout the year, but let's imagine they're paid evenly each quarter. That's $400 million of pure profit every quarter this year. For context, Tesla's biggest ever quarterly operating income was $417 million. Why is nobody talking about this? Seriously. Whether or not any credits were purchased in Q1 is unknown, but in either case, it's good news. Either Tesla has a bunch of surprise income in Q1 2020, or that income rolls into Q2 and beyond. If it's spread across 3 quarters, it's over $530 million. 2 quarters, $800 million. Or maybe it arrives all in a single quarter, or next year. The point is, this is free money, and a lot of it, and it's coming soon. Solar deployments. In early December, the following email from Elon Musk stating Tesla's top priorities was leaked. The first is making sure all cars are delivered to their customers before end of year. The second, just as important, is that we immediately increase the rate of solar deployments by a significant degree. Overnight, the Tesla homepage was updated, removing Cybertruck and Roadster from the main navigation and replacing them with solar roof and solar panels. Tesla hired aggressively for its New York solar factory, and all indications are that solar roof installations have been taking place throughout the quarter. Who cares about solar roof, you say? Bro, the average price of a solar glass roof is about the same as a Model 3. Seriously, don't sleep on Tesla Solar. Battery deployments. Tesla's battery business is by far its lumpiest, in part due to its relatively small size and in part due to the nature of its batteries, which range in use from powering single homes to powering entire islands. Tesla's grid-scale megapack was announced in mid-2019, and it wasn't long before we heard about its planned use in a number of new projects, including the replacement of some fossil fuel peaker plants. Big batteries equal big revenue. This one is very hard to predict, given a single contract can account for double-digit revenue on the storage side of Tesla's business, and how heavily they're pushing commercial applications. But the trend is up, and one worth paying attention to. Elon Musk expects Tesla's energy business to grow as large or larger than its vehicle business over time. China. Despite the entire world ending recently, China barely missed a beat. Even with a short shutdown, Gigafactory Shanghai is now producing Model 3s at close to its 150,000 per year capacity. This is insane, but it's true. And remember, this was done for 65% less capital expenditure than the US production facilities. Oh yeah, and it was built in record time. On top of this, Tesla also took a whopping 25% of the battery electric vehicle market in China in March. 1/4 of the entire f***ing market. As 2020 progresses, I expect more and more analysts and commentators will recognize that Tesla is dominating China and will make billions. Construction of Stage 2, which will produce Model Y in similar volumes to Model 3, is well underway and will most certainly be ramping before end of year. In short, Tesla China is moving at a stupendous rate. With lower labour costs, new efficiencies and a helpful government, I expect a lot of good news and strong financials from China. But we're unlikely to see much this quarter. It's too early. What's far more important is what Tesla guides. Will they mention demand, their order backlog, new partnerships, margins, Stage 2 completion date? Who knows? The one thing I do know is that China is Tesla's most important market this year. Pay very close attention. As you do, pay equal attention to what other foreign automakers have to say on their China plans, or lack thereof. Germany. I'll be surprised if we see the Berlin Gigafactory completed before year end, but we'll probably hear a bit more about Tesla's European plans during the call. Anything other than we have been delayed will be good news. Battery Investor Day. I suspect Tesla will announce a new date for their Battery Investor Day on the call. I recently shared my predictions for Battery Investor Day. Check out the video if you haven't seen it. A date would be cool. Even cooler would be some hints as to exactly what Tesla will reveal and discuss, but don't count on it. Guidance. All eyes will be on whether or not Tesla updates delivery guidance. Last we heard, before the health thing, Tesla was highly confident in comfortably exceeding deliveries of 500,000 vehicles. And I quietly expected Tesla to come closer to 600,000, if not surpass it. Tesla has a better idea than anyone when it comes to demand for their vehicles. I would expect that internally, Tesla will still be aiming to deliver well over 500,000 vehicles this year. The question remains, will they change guidance, reaffirm guidance, or tell us it's too early to know if a change is in order? As I've said in the past, Tesla is production constrained. To date, they have never been able to produce enough vehicles to meet demand. This demand buffer is a big plus. Maybe it's 1% more than production. Maybe it's 10%. Maybe it's 100%. I don't know. The point is, demand for Teslas could fall, and yet Tesla could still sell record numbers of vehicles in 2020. Is that true of anyone else? Now, I'm not saying they will. I don't know how much demand actually exists, but to overlook this demand buffer would be unwise. Q1 2020 will be soft for just about everyone, and Q2 2020 will be brutal for many. In terms of Tesla, there are so many unknowns which could impact financials that it's hard to predict whether or not we'll see a profit. The timing of ZEV credits, of construction, and of product ramps introduces massive uncertainty and the potential to swing $500 million either way. I don't expect we'll learn much new from Tesla's Q1 financials, but Tesla's Q1 2020 isn't about Tesla. It's about the wider marketplace. This is extremely important if you're a Tesla investor. There's no question Tesla will gain huge market share during this economic downturn. I've covered this at length in recent videos. What really matters about Q1 is Tesla relative to legacy automakers. The same goes for Q2 and beyond. See, the likes of Ford and GM will reveal their hands. Already facing the life-threatening transition to electric vehicles, many will delay or cut back their plans, announce layoffs, slash sales forecasts, decimate R&D budgets, cut dividends, and countless other indicators that will tell us two things. One, are they even going to try to compete with Tesla, or are they just trying to limp into next quarter in one piece? The latter would be their death knell. If Tesla continues scaling, expanding into China and Europe, moving ahead on new products and maintains strong guidance, while legacy automakers exit markets, scale back production, cut costs, and scrap or delay new products, we'll have an even clearer picture of just how far ahead Tesla is and how strongly they're positioned as the world inevitably transitions to sustainable energy and transport. As for a prediction on Tesla's stock price, I have no idea, but how's this? If, despite all odds, Tesla somehow pulls a rabbit out of the hat and shows a Q1 profit, which, while not likely, is possible given the unknowns like the ZEV credits and full self-driving revenue, Tesla's stock should go vertical. That doesn't mean it will. In fact, the stock defies logic regularly, so it's anyone's guess as to how it will react. But in either case, what everyone seems to be forgetting is that, despite a global economic downturn, 2020 looks like a breakout year for Tesla, a year in which their absurd lead becomes clear to even the daftest of observers, a year in which they gain market share globally while others atrophy. Don't get bogged down in the short term. Look at Q1 results in context and at the big picture. How is Tesla doing relative to other automakers? How is Tesla adjusting guidance compared to other automakers? And finally, which other automakers will effectively announce on Q1 calls that they're terminally ill? Q1 2020 will indirectly tell us more about the future of Tesla than any in its history, not by what they say or do, but what everyone else does. Something to think about. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Do you agree or disagree with any points? What are your Q1 predictions for Tesla? Will they post a loss or a profit? How much? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. This channel has kind of blown up since it launched, and I'm working on making the best possible content for you guys, but it takes time. Consider supporting the channel at patreon.com/solvingthemoneyproblem so I can continue creating content for you guys. There's a link in the description. And you can now also become a member of the channel to get some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.